Okay, well, welcome everybody to our QuickBooks workshop on recording income with QuickBooks Online. My name is Michael Fortin. If in case you're new to these sessions, just a little quick background. I've been teaching with adult learners. I've been an educator um, primarily at the high school level for Geez, this will be my 30th year. 1994, I started and got my degree at Thomas College, and then worked with adult learners, primarily adult ed programs. And then some years later, I was approached by SCORE to partner and to provide training. And so we SCORE and I have been working together closely for these workshops across Maine for probably more than 15 years now. And I've taught QuickBooks pretty much the whole time, at least since say the late 90s anyway, QuickBooks. But and QuickBooks back then was very different than the what we have now. We have three different versions of QuickBooks. So this is focused. This topic is all going to be on QuickBooks Online, the online version, which is the primarily the number one product with QuickBooks. Most people now are moving to QuickBooks Online if they haven't done so already. So here I'm going to share my screen and put a slide up here. So my email address is michaelwfortin@gmail.com. And feel free to reach out to me if you have a question you would like to follow up, regarding tonight's topic. If you, after the end of the session, if a question comes to mind, just reach out to me. But this is meant to be an interactive workshop. So, and it's a really small group. So that means you just feel comfortable to go ahead and unmute your microphone and ask a question. Go ahead and jump in. Let me know if you have one. If your device does not have a microphone, you can type them into the Q&A, the chat feature. But just feel free to unmute your mic and ask away. So tonight's session is about recording income with QuickBooks Online. We're gonna go right through about an hour and a half, and there's a lot of material here. There's far more material than we have time for. So this is just kind of a sliver of it. But this topic I think is important because anybody who has a business or does bookkeeping for a nonprofit has to worry about recording income, and it's a good place to start when you're first learning QuickBooks. So just a quick overview of QuickBooks Online, a cloud-based accounting system, which is a monthly subscription-based software. So you pay a monthly fee to use the system. It's accessible from any type of device, anytime, anywhere, that provided that you have internet access. So you cannot use QuickBooks when you're offline. You do need to be connected to the internet to use it. But the great thing is you can use it, of course, on an Apple device or a PC or an Android, and not have to worry about installing different versions of it, right? It's all the same. And then there are different levels, different subscription levels, from Simple Start, Essentials Plus, and Advanced. And each one of those levels has different features, and each one of them is priced a little differently. Most students that I work with use the Plus version, even if they've started with one of the lighter subscription levels, they eventually upgrade, just because if you want to be able to do inventory, for example, the Plus level, which is this one right here, Plus level, it has up to 5 users. You can track inventory with it. It runs about $85 a month, at least the last time I checked, or $1,020 annually. And if you want to add the payroll feature, you can add that on as additional fee for that. But each one of these levels, again, offers, more functionality than the version below it, and the advanced being the highest subscription at $200 a month. We are going to be using the QuickBooks Online test drive for our workshop tonight. We don't want you to use your existing QuickBooks subscription to play around in the system. That way you don't disrupt any of your data. Plus, the another benefit of having test drive is actually several benefits, but another is that you can see, if you don't currently subscribe to the advanced level of QuickBooks, you can see what kind of features it offers and play around with it. Even outside of class, you can keep this link and use it. And I like to use the sandbox, if you will, or this test drive, because it allows you to experiment and not disrupt your data. So if you want to enter a transaction and you can't quite remember how to do it, or if you want to try something that's maybe a little different than what you normally would do, you can go into test drive and practice and test it, and then feel comfortable with it before you do it for real in your real live system. So those are all good reasons why I find test drive to be very helpful. So I've pasted the link inside the chat, but I would recommend that you write this down someplace or save it as a bookmark and keep it. Another point that sometimes comes up is if you have a paid subscription to QuickBooks and try to use this link, it may force you or ask you to log in to using your own username and password. So if it does that, I try to refresh the browser and see if you can get by, because you should not have to log in. And if you simply can't get around it, it's probably because you have a cookie stored on your browser. And the easiest way around it would be to switch web browsers. So if you normally use Google Chrome, for example, and that's how you normally log into your subscription account with QuickBooks Online, I would close it and try to open Microsoft Edge or Firefox or some other browser program on your device, and that should get by that little issue with forcing you to log in with your own username. I think pretty much 100% of the time it's been successful. But hopefully, there'll be no issues tonight, and it'll be quick and easy to get through. But we're going to save that test drive link and use it here in a bit. The first thing though is, before we get into it, is to talk a little bit about the objectives for tonight, and then to talk about recording sales just kind of at a high level before we use the system. So we're going to talk about how to track company sales. That includes setting up customer records in the customer center, tracking income and expenses by job. So just a little bit on expenses, not really going to focus a whole lot on expenses since we're focusing on income tonight. But there is an upcoming workshop if you're interested in entering expenses, recording expenses, and that's on Monday, October 28th. So if you want to sign up for that additional session, again, at the end of this month, it's another Monday, October 28th at 6 o'clock. You can do that by going to the score.org website and sign up like you did for tonight. And that will kind of dovetail from tonight into the next topic. So we're also gonna talk about recording sales receipts, what sales receipts are when you use them, the undeposited funds account, how that works within QuickBooks, and then recording income and payments, invoices and payments from customers, and recording and generating customer statements, and then recording bank deposits and how that works as well. So, we'll kick us off first and just talking about company sales. When we track company sales, record sales, you have different options. Most businesses have one of the like three different ways in which you enter sales into QuickBooks. So you may have um, sales receipts that you use. A sales receipt is a form in QuickBooks, kind of like if you go into a department store and you go up to the cash register and make a purchase. The cash register will spit out a sales receipt, and you're on your way. So that's we're talking about a sales receipt, and that payment occurs at the time of sale. So there is no billing, no credit billing to customers involved in this. It's simply payment made at the time of sale. So sales receipts are specifically for that purpose. And you've got two different ways in which they're used. Typically, if you have somebody that pays in cash, or they might write a check or use a debit card of some kind, or credit card, right? You may have any of those, and those would be candidates for a sales receipt. The other is you may use third-party applications for recording your sales, like Square or other POS systems. Many times there was an integration or a connection between those third-party programs and QuickBooks. I know Square. A lot of people use Square, and with QuickBooks Online, there is a third-party company that made an integration that will connect Square with QuickBooks, meaning that all of the sales information from Square can be imported into QuickBooks. I have not used the integration myself, and I don't know much about the integration, just knowing that it exists and that many students have used it. So, um, so if you have Square, if you've never used it, I mean, you can certainly look into it on the Intuit website. Google it, you'll find information on it. Has to be that integration only exists with the QuickBooks Online version. So other versions of QuickBooks, you have to do something different. So if you don't use that integration, or that little software program that connects Square to QuickBooks, you can always enter it manually. And in that case, you would use a sales receipt, because sales receipts um, our way of recording payment at the time of sale. So if you record sales on a daily basis, for example, at the end of the day, you can get a grand total of the day's sales from your POS system. Or if you have just a standard analog cash register, right, you can print out a Z report out of the cash register and take your tape, and it will total up all of the different sales in each department. You can type all that data into a sales receipt and record the sales that way. So that's kind of how sales get into QuickBooks from third-party POS systems or cash registers, or you can generate a sales receipt, for customers directly out of QuickBooks itself. And then the final option is invoices. And invoices are used when you have payment that will follow the sale. So customers will owe you money. And it's common for, if you have a contractor, if you have some sort of service where you perform the service and then send that invoice to the customer, and they will then subsequently pay you for it. That's common. You may have invoices. You can set up recurring invoices automatically if you certain kinds of businesses, let's say property management, where you have apartment buildings and you collect rent. You can use invoices for that, and keep track of who has paid their rent and who hasn't, and can even set those up recurring, so it will automatically send out like an invoice to your customers. could use it for like lawn care or plow contracts for snow removal or any sort of business where you have like a monthly type of service. Um, that's the recurring feature is a great way of doing that, and it saves you the time of having to enter the billing manually every single month. So both of those sales forms, whether it's a sales receipt or an invoice, will track detailed information about what you're selling. And um, there's a lot of value in doing that. So you can keep track of the types of things that you're selling, the quantities, and you can use that information to help make business decisions about, whether you should expand a particular area of your business, or, you have offer products that just don't get a lot of attention, and maybe you remove those from your portfolio of things that you sell. So it's very, very helpful to have that information. Um, we'll talk a little bit more about this just to kind of illustrate the point. I give this slide up here. I'm gonna go back to it, and let me expand this just a little bit, make it a little larger. So this is a nice way of talking about, talking about the sales process within QuickBooks. Um, so, for example, if you have um, cash customers here on the left column and compare it to credit customers on the right side, we get to see as kind of a side-by-side comparison of how QuickBooks is utilized in each of these scenarios. And it also gives us a chance to look at some of the different forms within QuickBooks in the sales process. So we'll take the first one. The first row that goes across it says customer estimate optional. So you can do estimates within QuickBooks if you have customers that want to get a quote or a bid of some kind prior to a job occurring. You can create estimates and send those out. Um, Estimates are non-posting transactions, which means that if you create an estimate, it has no financial impact to any of your accounts in your chart of accounts or any place in QuickBooks. It is QuickBooks will track the estimates under the customer record. So it'll keep track of the fact that you did an estimate and how much the estimate was. But it doesn't do anything with it. You can create 100 estimates and it won't affect any of your financial records. Um, in a You can see that in a cash scenario on the left column, you usually don't use an estimate. Customer will just simply buy something and pay for it at the time of sale. But for credit customers, it is an optional step where, depending on the type of business, you may issue estimates. The great thing about those estimates is that you can turn those in to invoices, and without having to re-enter all the information. So it's simple um, click of the button, you can bring those estimates into an invoice. Um, Sales orders is the second line. And it's interesting, at least to date, as far as I know, sales orders is not an option on the QuickBooks Online version. But so if you've ever used sales orders, it's basically it's like used for capturing and tracking orders from customers, customer orders. They're very similar to estimates. So, but the desktop version or enterprise version of QuickBooks still offers that feature, and QuickBooks Online does not. At least to my knowledge, they've not added it. So we'll just kind of skip over it for now. Recording a sale. So recording a sale would, for a cash customer, mean just using a sales receipt. That means going into QuickBooks, entering in the customer, entering in what you've sold for products or services, and then um, saving that transaction, and then that records the sale. And um, comparing that to creating an invoice, what's different between a sales receipt and an invoice is that if when you go into the customer center, a sales receipt will not show any balance due. It'll be a zero balance. It will show you how much you sold to that particular customer, how much it was, but the balance will be zero naturally because just by creating a sales receipt, it assumes that you have received the money already, and it will put that into a holding tank called undeposited funds, which we'll talk about here in a minute. Invoices, though, are different because it will show us that there is a balance due from the customer, and it will record that in our accounts receivable account in the chart of accounts, meaning that the customer owes us money and will need to make a payment at a later time. Both transactions are similar in that they record money coming into one of our income accounts, but the debit side of the transaction, or the other leg of the transaction, is handled differently, where sales receipts assumes that the money has been received and puts it in our holding tank ready to bring to the bank. Whereas for invoices, it records that in accounts receivable, waiting for it to be paid. So sometimes I've had newer students, just kind of starting off. It's easy to get confused between a sales receipt and an invoice because they both look like they're sales forms, but they're two very different things. And creating an invoice will require you to do additional steps in order to pay that invoice, to remove it from QuickBooks. You need to record a payment, which is a separate step. And so if you're getting payment at the time of sale, but you're creating invoices, it's actually extra work for yourself because you have to go in and do this second step, which is to record the money you received. When if you already gotten paid, that's not necessary to do. And the other danger is if you use the wrong sales form and create an invoice and you forget to record the customer payment, that balance will stay open in accounts receivable. And if you do it for every sales transaction, of course, it continues to grow and grow and grow and never gets paid because it just sits open because you don't apply the payments, then that poses a problem. So again, that just to be clear, sales receipts are for payment at the time of sale, which is different than invoices, which does require a customer to pay you in another step. And the next row down says receiving money and payment of an invoice. That is not necessary in a cash scenario, but it is important under the credit scenario. And then finally, the last step, depositing money in the bank. So both, which is the same on either one of these, whether it's cash or credit, the final step is that the money has to go into a bank account to be recorded. And there is a separate step for recording deposits. So if you were to back up and kind of look at these two side by side, we can see that cash customers only have like two steps. Record a sales receipt and then record a deposit. And that's all you need to do. Credit customers that are going to owe you money, you could potentially have, four steps here. If you do estimates and then creating invoices, receiving payments, and recording the deposits. So there's definitely more work to managing credit customers over cash customers. So, okay, well so let me pause and just see if there's any questions before we move on to the next topic. Don't be bashful. Make sure you can just unmute your microphones and ask away if you have any questions. Okay. All right, we'll keep moving then. So we're gonna get our our hands dirty a bit here. We're going to jump in and practice using QuickBooks and recording some of these sales transactions, and then we're going to take some time analyzing them and talking about them. Okay, so the first thing is before we sell anything, before we record a sales transaction, we need to have a customer to sell it to. So we're going to learn how to add a new customer. So you can add customers as you complete an invoice or a sales receipt. So for example, if you were opening QuickBooks for the very first time and wanted to record a sale and had not entered any customers yet, means your customer center would be blank, empty. You could, on the invoice or sales receipt, type in a customer name, and QuickBooks will recognize that it's a brand new customer and ask if you want to add it at that moment. So you can do it that way, or you can be proactive and add those customers in advance. And we'll take a look and see what the customer screen looks like here. But customers are added from the sales center. And so we'll do that. We're going to enter a customer by the name of Mill Creek Farmers Market. Okay. So I'm going to go over to QuickBooks. Don't forget now that we want to have you follow along if you can using the QuickBooks test drive. Okay, so do not try to use your own existing system. Make sure you're using test drive so we don't enter anything. Let me give me a second and open it here. I think I timed it out, looks like, so stand by. We will open test drive. Okay, it is open. And okay, so you should be seeing my the test company. I use the link, the same link that I sent to you earlier, and we're at Craig's Design and Landscaping Services. And I'm currently at the dashboard, the main dashboard of QuickBooks Online. So to add a customer, I'm gonna use the left menu, and I'm gonna hover over Sales. And under the sub-menu that appears off to the right, I'm going to slide over and I can slide down to Customers, and we'll open up the Customer Center. What you'll also notice too is that across the top of the Sales Center, you can see I have tabs across the top. I have Overview, All Sales, Invoices, Sales Orders, Customers, Products and Services. It goes across the top. Those are the same tabs. If I were to hover over the left menu Sales, you can see all those options. It says overview, all sales invoices. So those are all the same. So I can either jump directly to the tab I want, from the left menu, or I can really open up any one of these and I can go to the correct tab. So the customers tab is the right place to be. And I'm going to use the green new customer button in the upper right hand corner, and I'm going to click that and it will open up a new customer record. All right, so I want you to follow along and do this with me and actually add this customer. And I mean, you can watch my screen as well, but it's always best to try it along with me so that you can share in the fun. And it's the best way really to learn this stuff. Okay, so I'm going to type in Mill Creek and put in farmers market. One thing I will say is that the QuickBooks test drive is a little slow. So you may find that it takes a second before it accepts. So just kind of have to go with it. So Mill Creek Farmers Market, the company name, I have added it. And you can see, though, there's all kinds of information that I can put into the customer center, right? I can add in an individual's name if I want, or a company's name, can record their email, phone number, website, and there is a checkbox. I'm going to leave this unchecked for now, but we're going to talk about it here shortly. It's called is a sub customer. I'm going to just point it out, but we're going to hold on it for just the moment. And then addresses, you can record the address of the customer, and that way you can record that information for mailing them invoices, or just keeping track of where they're located and so forth. There's a place that you can make notes about the customers. You can even add attachments up to 20 megs in size. So some QuickBooks users will take advantage of this and, like, attach a business card or a contract, or um, maybe a map, or any sort of like documents that might be associated with the customer. So it's a convenient way of keeping that information electronically all in one place. And then you can record payment information, about what the primary payment method may be from that particular customer. And then there are additional fields available. So if I wanted to track and use customer type, um, customer types are not, again, they're optional, but, like, for example, if I wanted a class of customer called commercial, and one called government, and residential, um, or if I had a restaurant, maybe it's, takeout versus catering versus, like, whatever, however classifications I want to use, I can set those up. Right now, they're blank. There's um, Craig's Design and Landscaping, this practice company, does not have any customer type set up. So, but we could set up our own if we wanted. And then taxes. So it will record tax and tax exempt information. If you're selling products, then they're subject to sales tax, in Maine anyway. And unless they're a nonprofit, or exempt for some other reason, you can record their exemption certificate information here on this screen. And then opening balance. So opening balance is only used in the case where we are transferring information from a prior accounting system into QuickBooks. Like, let's say you're halfway through the year, and you were keeping track of the customer's balance, using Excel spreadsheets, and decided today you were going to, start using QuickBooks. That opening balance field is where you could put it into QuickBooks, the balance that customer owes, and then use QuickBooks at that point on to track payments and the balance due. Of course, there's no details associated with opening balance. I mean, you can just basically put in the amount that's due and the date in which that it applies to, but and that will put behind the scenes an accounting entry, or it will record a transaction in QuickBooks to add that to accounts receivable. But if you wanted to see the actual details of where that balance came from and what consists of that balance, you'll have to rely on your former accounting system to get that information. The only other way around that would be don't use the opening balance field, and instead enter an invoice into QuickBooks for all the customers you want to transfer in. And you could essentially, back in all of the information that's for this year that you want to add to QuickBooks and enter it. So it actually kind of lends some thought to, when is a good time to start using QuickBooks. If you already are operating a business and you are using, a manual way of record keeping, or if you're using some other program, when is a good time to convert over? The cleanest time, of course, would be at the beginning of a year, like January 1st, for example. And that way you have time to prepare and plan, and because there are some things to do, some things to think about, if you're converting from one system to the other, and that gives you time to kind of set a date and plan for it. But um, you can certainly convert over at any point of the year. But it's always best if you can start at the beginning of a year, and if you can't, perhaps the beginning of a quarter or the beginning of a month, or some time where there's a clean a break as possible, because that first year will be kind of a year of transition, and you will have to, in order to get like the total amount of income and total amount of expenses for your business or your organization, you'll need to add together the information from QuickBooks as well as the information from the former accounting system, and add them together to come up with the totals. And to avoid all that, if you want to just keep it clean and have QuickBooks be your point of record from day one, then plan to start, January 1st. Especially since we're in October right now, and if I were thinking about converting over to QuickBooks, I might start thinking about it and maybe, get a subscription and start planning for it, and, setting up my customers and my vendors, and, setting up the chart of accounts and my inventory and what I sell, and get all that stuff ready. And then when it comes to actual using it to record transactions, I'd be ready to go for January 1st. So that would give me a little bit of time. So anyway, it's always good to kind of plan for these things. Lastly, too, in the customer record, there is a place where you can record custom fields. You can see there's no custom fields in here now, but like for example, if I wanted to record a date of birth for the customer, or the customer's um, you know anniversary date, like when they first became a customer, or whatever information is relevant, I can create placeholders that I can just capture that information. So it's a great feature to have this ability to keep track of extra details, and you can add those custom fields onto reports in many cases, so that they will augment the reports that are already in QuickBooks. Like if I wanted to sort or filter, um, like I had one student, for example, who had like a spa, and they had a salon, and they used the custom fields to capture, what the customers, any customers who came in and had hair coloring services done, they could record the color that they typically use, the style number or the dye number, so that next time they came in, they could look it up and it was right there on their customer record. So that's one example of, you know, how a student used it. So anyway, at this point, we're ready to save it. All I've done though is entered in Mill Creek Farmers Market as the customer name. I'm going to click save, and it will record that customer, and then the customer will now appear. You can see there's zero balance. There's no information in here except the name. But if I were to go back to the customers list, I'll use that left link in the upper left-hand part of the screen where it says customers with the left arrow. I'll click that, and I'll go back to the customer center, And now, if I scroll down through the customer list, I will see go down to the letter M, I can see Milk Creek Farmers Market listed there. Okay, so I've successfully added my customer. So I'm going to keep moving along, but stop me if anybody has questions. I'm going to go back to my slides here for a moment. Okay. Um, so job costing, that is a feature within QuickBooks as well. It may not all need or use job costing, but just to explain it, it allows us to record by using the sub-customer field within QuickBooks. It allows us to track um, projects basically for customers. So um, like the types of industries that might be most beneficial for job costing would be like a contractor, somebody who does multiple projects for the same customer. For example, in this case, the Craig's landscaping services, that might be applicable, right? If I have um, if I do landscaping work, like add, trees and shrubs and things, and then I also do lawn mowing, like each one of those could be separate projects. So I could create these little projects for them. And what that allows me to do is to record all of the income and all of the expenses as it pertains to that one project. So I get like a little mini profit and loss based off the project that I'm doing. And at the same time, I'm also recording the profitability, of course, just as a customer overall. So it really is a very handy feature to have. Um, so adding a sub customer is basically the same as creating a customer, just like we did for Mill Creek, but we use that sub customer checkbox that I talked about, and we use it to basically create a sub customer for the project that we're doing. So we go again all into new customer, and then we would put the checkbox in the sub customer field, and then name it that sub customer basically is a project name, and we're going to try it together here. So let's create like a sub customer, a project, if you will, called the Mother's Day weekend for the Milk Creek Farmers Market, right? So imagine that um, we have a customer, Mill Creek Farmers Market, and for that customer, there's like one project that they've asked us to do like landscaping services for this Mother's Day weekend event. And we're gonna practice and see how that goes. All right. So I'm gonna go back to QuickBooks, and I'm still in my customer center, and I'm ready to create a new customer. If you have lost your way, you can always get back here by hovering over the left menu for sales, and then slide down to customers. It will bring you right here to this customer center. I'm going to use the button in the upper right hand corner, new customer, and I'm going to click that. And under company name, I'm going to create this project. I'm going to call it Mother's Day Weekend as the name for the company. And then I'm going to go down where it says is a sub customer. I'm going to put a check mark by that box, and it's going to open up the parent customer field. So for parent customer, I am going to choose the Mill Creek Farmers Market. So I'm going to type in MILL, and you will find Mill Creek Farmers Market will come up. I can also just use the drop down and pick and select it out of the list, but Save myself some time here by typing it in. And you see there is a little check box underneath it that says bill parent customer. And I'm going to leave that selected. What that means is that anytime I bill for this project, at the same time, that will show up in the parent account. So it's a parent-child relationship, right? So I have a parent at the top and then little children sub-projects underneath the parent. So the total of all of the children projects will all get totaled up and the grand total will show up in the parent account. So it's a parent-child relationship setting these up. All right, so I'm going to just click save now that I've created this. And then we're going to take a look at the customer center. So now that I've created a couple things, as you will see, I have Mill Creek Farmers Market here. And then underneath and indented in is this Mother's Day weekend. And you'll see it in the customer center where I have the customer name and then I have a pipe up and down separator and then Mother's Day weekend. So that tells me it's customer job, okay, and they're connected that way, or parent and child, or customer sub-customer, that those two are connected. So I'm going to use the left customers link, go back to the customer center and just look at what it looks like in the big list. So if I scroll down, you can see that I have some other customers like this. You see Freeman Sporting Goods, for example, that's on your screen here. There are actually two sub-customers, right? One is called 969 Ocean View Road. Another one is called 55 Twin Lane. So those are like two different projects for the same customer, right? Because maybe they have two locations. Like they have this Ocean View Road location and then the Twin Lane location. I've actually created like a sub-customer for each location. Okay. And then if I scroll down, you'll see Mill Creek Farmers Market as the customer I created. And then underneath it, the brand new sub-customer called the Mother's Day weekend. Okay. So how this works is now that I've created these is and you can watch my screen rather than follow along for this next piece just to demonstrate it so you can better understand it. If I go into create a new invoice, let's say, and we're going to talk about this when we talk about invoices here shortly, but let's say that I'm going to create, I have this brand new invoice for this customer that I'm going to bill them, right? When I click create an invoice, it's going to ask me to pick the customer that I want to bill. So I have an option. I can either bill Mill Creek, so I'll type in MILL for Mill Creek, or I could bill the sub-customer, which is the child, the project, if I will, right? So it's not a requirement that I need to use this job costing feature, this sub-customer feature. It's optional, but depending on the type of business you have, it may be a helpful feature to use, right? So again, when I go to invoice this, I can pick either the parent or the child. So if I bill the child, let's say Mother's Day weekend, and I create an invoice, I'll just kind of quickly throw one together, $75 invoice, and I click save. We'll take a look and see what that appears to be in the customer center, right? So I now have this $75 invoice from Mill Creek. When I go out to the customer center and I scroll down, I'm going to go to customers. I'm going to use the customers tab on the top of the screen. And I'm going to scroll down to Mill Creek. All right. Okay. So you will see Mother's Day weekend, I have a $75 balance that's due. It's also the same balance for Mill Creek Farmers Market, the parent, right? Because if you remember that little check mark that said bill with parent, That means that all of the little children accounts underneath are going to all total up, and the grand total is going to sit with the parent. Okay. So I'm now able, by doing this, I'm now able to record the income for that customer, for that specific project separately from the rest of the billing activity. Okay. So that is the benefit of using it. Um, if I happen to have expenses associated with that, guess what? I can also tag those expenses to that same specific project so that it records both the income and expenses, and it will help me determine whether I make money on it or not. So, just to demonstrate real quick, if I go into expenses, again, watch my screen rather than try and follow along because I'm going to do this quickly just to demonstrate it. But if I create a new expense transaction and I say, look, I did that project for Mother's Day weekend. Well, I had um, to pay for some materials, and I want those expenses to be part of the project. So let's say I went to this insurance company, and I had to buy insurance for that event specifically, and put in some fees. Okay. And I say the fees are $100 in fees. Now don't forget, I only charged 75 bucks in sales. And if it costs me $100 in fees, it means I'm losing 25 bucks on the deal, right? But anyway, in this expense transaction, there's a customer field, and I can tag it and say, no, you know what? That is specifically for Mother's Day weekend, that project. And I save and close and record that. All right. So now um, I have a little project profit and loss going. So if I were to go under reports, real quick, I'll show you this on my screen. Again, follow along with what I'm doing. And I do profit and loss. Actually, let me see if I do profit and loss by customer. I will see across the top of the screen all of the different customers I have. So if I scroll across to Mill Creek, okay, there it is, Mill Creek Farmers Market. There's my $75 in income. There's my $100 in expenses. And I scroll down to the bottom. Net income? No, I've lost 25. I have a negative $25 in income. So a net loss of $25 on that specific project. Okay. Um, so job costing is pretty cool. Again, it's not for every type of business out there, but it allows us to have as a really cool way of tracking. Um, and all of this is only possible in that I'm entering the information correctly and I'm tagging things correctly, right? Because I've said this in prior workshops that you may have attended. It's only as good as the information I'm putting in. So if I don't record the expenses and if I don't record it to the correct, tag it to the correct customer, then this report won't be accurate. It will make it look like I made money when I didn't. So it all is dependent on whether I'm tagging everything correctly. So anyway, so that is job costing. I'm gonna keep moving along, but stop me, please, if you have any questions. All right, here we'll scroll down. Okay, so next we're going to create a sales receipt together. Just as a reminder, sales receipts are generated when there's payment at the time of sale. There will be no balance that's due by the customer in the customer center. It's not posted to accounts receivable, right? It's a basic, simple transaction. So we're going to create a sales receipt together, and we're going to create a sales receipt for Mill Creek, and we're going to sell 10 units. It says a fertilizer, but we may actually, to simplify it based on time, we may just pick something that's already in the inventory list. Okay, but we're going to use the Mill Creek customer to create this sales receipt. So let's go back over to QuickBooks, and we'll do this together. Okay, so I'm going to use the new button in the upper left-hand corner of the left menu, right? On the navigation bar on the left where it says new, I'm going to click that. And under the customers column, I'm going to choose sales receipt about halfway down the list. And that will open up a brand new form for sales receipt. Okay. So the customer, Mill Creek, I'll type it in. Now, if I wanted to, I could use the Mother's Day weekend, but we're not. We're going to just use this for the parent, the Mill Creek Farmers Market. The other thing I could do is a demonstration. If I were to type in a customer in that field, some customer that I did not already have in my customer list, then QuickBooks will ask me if I want to add them as a customer. So it's really, really easy to add customers. And I can do it right from the sales form. Okay. But anyway, we're going to use Mill Creek Farmers Market. I'm going to leave the sales receipt date. That's the date of the transaction. I'm going to leave it as today's date. I have this tags field. So tags are helpful if any of you are social media experts out there, right? Everyone kind of knows what a hashtag is, maybe at this point. The pound sign, it's over the number 3 on your keyboard. But using a hashtag allows us to be able to designate that as a searchable piece of text. So if I were, posting something on Facebook or some other social media site, and I put a hashtag in that says, anniversary, wedding anniversary, hashtag wedding anniversary. It means anybody who does a search out there on the term wedding anniversary would potentially have access to that post that you put, because it will come up as a term in the search, and it will identify it. So using that same concept within QuickBooks, you can add tags so that you can search for those keywords inside of QuickBooks. So if I'm going to be, let's say I'm going to sell design services to Mill Creek Farmers Market, and that's what I'm selling. I may want to put a tag, as design services here so that it would come up in a search. So I'll just add it in. Say, I could say design services. But it's always good. Anybody who's used older versions of QuickBooks, the memo field was basically the same, kind of the same thing. But I encourage anybody to use the memo field or tags, because that little extra step is very helpful when you're trying to locate transactions, and it will make life easier in the long run. So now payment method. This is payment at the time of sale. Let's pretend that the customer is giving us a check, but it could be a check, debit card, cash. All of those things would, end up being the same effect in this transaction. But we'll say check. So I'm going to select check out of the payment method list. And in the reference number field, I will put the check number that the customer gave me. So I'll make one up. I'll just say it's check number 1234. The next field that says deposit to. Right now it says undeposited funds, and I'm going to leave that. After the end of this transaction, I'm going to talk about undeposited funds and what that is and why you use it. It is not mandatory to use undeposited funds, and there are reasons why you would change it in certain cases, but it's the default, and I'm going to leave it that way for right now. Under products and services, this is where I look at my inventory list, the list of things that I sell, my products and services, and then I'm going to add this to the sales receipt. So, i.e., what am I selling Mill Creek Farmers Market? Well, I'm going to sell them design services. So if I look at my inventory list, and if I were to type in design or just simply scroll through the list, you'll see I have a income category, an item in my item list called design. So that's the one I want to use. And it comes up automatically, the rate at $75 an hour. So let's use quantity of 2 just to make it a little different. And now 2 at 75 now equates to $150 for that line item. Okay. And then I can scroll down and verify there's the subtotal 150. There is a place for taxes. We'll leave taxes at 0. Let's say, because we're selling services which aren't taxable. And $150 is how much has been received. Customers paying at the time of sale with his check, so the balance due is 0, which is correct. So, other things, I could type a little message if I wanted to, thank you for your business, and that's kind of the default one, but I can make up my own if I want. Or I can, continue to add in additional lines on the sales receipt if I'm selling more than one item. But for now, I'm just gonna leave the one item on there, and I'm gonna click Save and Close in the lower right-hand corner and record the sales receipt. Okay, so let's take a look and see the effect of the sales receipt. I'm going to go using the left-hand menu, hover over sales, and I'm going to go to customers, go back to the customer center, and we're going to see what QuickBooks did with this transaction. Okay. All right, so I'm back at the customer center, and I'm going to scroll down, and I'm going to find Mill Creek. Okay. And you will see Mill Creek Farmers Market. The balance is still only 75 bucks from the invoice I created. There is no balance for that $150 sales receipt because a sales receipt does not record a balance. It's 0 balance due. They paid at the time of sale. If I click on the customer, so I'll just click on the customer's name and open up their record, I can see all of the transactions within this customer's name. I'm going to scroll down, and you'll see my sales receipt number 1039, Mill Creek Farmers Market, $150, and it shows me that it's paid. Okay, so there it is. So what happens, however, behind the scenes within QuickBooks, right? Exactly what is occurring when I create a sales receipt. So I said it in prior workshop, but if you weren't here, invoices and sales receipts, any sort of transaction within QuickBooks, all transactions are stored in registers inside of my chart of accounts. Right. So if I want to find an invoice and look to where it's stored, I mean, I can go into the customer center and go to sales, or go to the customer in which I sold it to, and I can find the records, right, of what occurred. So I can click on like 1039, I can click on it and open it, and it will show me the transaction. Okay, but that is not where the transaction is stored. It is not stored here. It is giving me a view into it, but is not stored here. It is actually stored within my chart of accounts behind the scenes, and what QuickBooks is doing for me is recording these transactions automatically. So I'm going to go to the chart of accounts and we're going to take a look at it. I'm going to use the left menu and I'm going to go under the transactions menu item. And then I'm going to hover down, slide over and down, hover over chart of accounts, and I'm going to click on chart of accounts and go to my register. All right, so because I'm recording a sales receipt, right, there are going to be two, at least in any transaction I record, there are a minimum of two accounts that are impacted with every transaction and sometimes more. But a sales transaction for a sales receipt is going to use the undeposited funds account is one. So I'm going to go click on undeposited funds and I'm going to click on view register. And I'm going to see in here, the very top, Mill Creek Farmers Market. There's the $150 for that sales receipt. And if I look over at the balance column on the right-hand side, I can see that as every sales receipt is created using undeposited funds, it adds that money to my holding tank. Okay. And I have a grand total using the upper right-hand corner. I can see 2212.52. That is the grand total of how much I should be holding to bring to the bank. All right. We're going to talk about that more in just a moment. All right, so that's one side of this transaction. The other side, of course, is the sales side of the transaction. I recorded design services. So I'm pretty sure design services is under I know I have design income, but it may be a different account. But I'm going to try design design income and just see if it captured it there. So there it is. Yes. The last workshop I didn't show up for some reason. But anyway, here's design income. My sales receipt, 1039. All right. There's the $150. Okay. So that is the other side of this transaction. So QuickBooks behind the scenes, when I created the sales receipt, did two things. All right. It I have two accounts. Oops. Yeah, let's take that out. Okay. So I had undeposited funds. And again, I had an income account, which happened to be design income. Okay. So I have the debit and credit side of these T's. So QuickBooks behind the scenes recorded undeposited funds, the $150, and then recorded a sale of $150. Okay, so that was the transaction that was recorded. Okay, so that's a sales receipt, and that's how it works. We're going to now look at an invoice, okay, and see how that works. So, here, let me go back to my slides here and go down a bit further. And, okay, before we get into the invoice, though, undeposited funds. Just to talk about that deliberately for just a second. So undeposited funds is a temporary holding account within QuickBooks. It tracks all of the checks and credit card receipts and cash, anything that I have received from payments from the customer before they are deposited. And the whole idea of undeposited funds is it makes reconciliation of the accounts easier. Okay, so in other words, if I want to reconcile my bank account to QuickBooks, um, undeposited funds makes that process much, much easier. So, what it means is that when I record let's say that I had 10 customer payments come in today, October 7th, right? Um, if I do not use undeposited funds and instead tell QuickBooks that every transaction goes directly into my bank account, um, it will record them, in my checking account as separate transactions. So imagine this, October 7th, I have 10 transactions, each one, let's say they're $10 each. So 10 transactions, each one is $10, a grand total of $100 in sales today. Most people at the end of the day are going to take that $100 and deposit the $100 in total into the bank. And that $100 deposit is going to show up at the end of the month on their bank statement as a single deposit of $100. Without using undeposited funds, QuickBooks will enter each sales transaction as separate deposits into your checkbook. So it will create 10 separate deposits in QuickBooks. So trying to line up and match up those 10 deposits to agree with the single $100 deposit of the bank would be hard to do, get confusing. So to make them match, if I wanted to match the bank with the QuickBooks, I would need to fill out 10 separate deposit slips for today's transaction. So I have 10 deposits in QuickBooks, 10 deposits at the bank, and I bring them to the bank. They might get cranky if I gave them 10 $10 deposits. So undeposited funds eliminates all that. It makes it so that it kind of queues them all up. It keeps storing them in this holding tank. When I'm ready to go to the bank, I simply tell QuickBooks which ones I want to deposit. It totals them up and creates a single deposit that will match the bank deposit that I bring. So that's kind of the idea of undeposited funds. Um, Undeposited funds, you should never have, like if you go and look at the chart of accounts in QuickBooks, I'll show it to you on your screen. Um, right, let's look and just see what the balance is real quick of undeposited funds. So if I scroll up to the top, undeposited funds right now totals 2,212.52. So I should have, if everything is done correctly, $2,212.52 in my hand, ready to bring to the bank. So if QuickBooks tells me that I have 2212.52, but I actually don't have any money to deposit, then I have a problem. I have mistakes in place. It means that I've probably created sales receipts in error when actually I have already I've actually maybe should have created invoices instead of sales receipts. Okay. So anyway, that is how undeposited funds works. And in some cases, businesses may decide instead of using undeposited funds to indeed make separate bank deposits directly to the bank. If you are using QuickBooks and connecting it to your bank account electronically, you may not use the undeposited funds and perhaps may rely on just the bank deposits as they're processed by the bank to come through, and then you match them up with which customers they apply to. So it can get tricky, right? If I get let's say that I use Square and I had 10 people pay me today through Square. Well, Square is not going to send me separate payments. It's going to send me one total of all the money I collected today, and it's going to collect its fee for processing that, and it's going to give me whatever's left. So if that comes in, I use electronic banking, and that comes in. I then need to match up that $100 payment. Let's say I only get $90 because of the fees, right? I have 10 customers who owe me $10 each, but I only receive $90 from Square. If I use electronic banking, I need to go in and record those payments and that deposit and apply it to the 10 customers that owe money. And I also need to record the expense, that $10 fee, to make sure that's recorded, because I don't want to penalize the customer for not giving them full credit of the payment, because Square took a chunk out for processing the fees. So that's more like what you would experience if you're using electronic banking rather than manually kind of recording the deposits in QuickBooks and not connecting it to your bank. So two different ways of doing it. But all right, but let's do, because we have about 7 minutes left, let's do the invoice so you understand how invoices work. And I'm going to create an invoice. And in this case, let's scroll down here. We're going to create an invoice, and we're going to create it for a brand new customer that's already not already in the system. So creating an invoice, as a reminder, it's no payment is made at the time of sale. And that the fact that I create an invoice means that the customer balance is going to be tracked in the customer center, and it will be posted to accounts receivable to track how much that customer owes me. To create an invoice, I'm going to use the new button in the upper left-hand corner, and under the customer column, I'm going to choose invoice. We are going to create a brand new customer by the name of Bob Mason, okay? And we're going to sell something from inventory. So let's go do that together. I'm going to go back to QuickBooks. And using the new button in the upper left-hand corner, I'm going to click New. Under Customers, I'm going to select Invoice.
I have a quick question.
Go ahead.
So from what I learned about QuickBooks, you're never ever supposed to reconcile the account while you have an accounts receivable. Can you explain that more in depth to me?
That doesn't make sense to me. No, you should always reconcile your bank to QuickBooks um, whenever you get your bank statement.
Okay, I understand that you should reconcile the account when you get your bank statement, but if you have something pending in accounts receivable, I was told from my accounting job that if it's account receivable, you need to figure out what that account receivable is so that you don't have that in there when you reconcile, because you're going to have to unreconcile it at that point to figure out why the money wasn't paid
I know
to the accounts receivable.
doing a bank reconciliation is just comparing the money that QuickBooks has received and the money that you have spent out of QuickBooks to what the bank has for records. Accounts receivable has no bearing on the bank reconciliation.
I understand that, but if you put it in manually, because sometimes the bank does not, the type of job that I have, by the way, my name is Jasmine. I'm sorry. I work with Joseph for Hudson Trucking and Transportation.
Yeah.
Um, my understanding is if you have an accounts receivable, then you need to figure out why it didn't go through the bank to make it not an accounts receivable. You need to figure it out, whether it be by you entering it in through an invoice or, transferring over some data from your bank that wasn't transferred over. You're and I may be wrong about this because, like I said, I learned this from my accounting job, but they said that you are supposed to make sure that there is nothing on that accounts receivable list.
No, that's not true. So,
Okay. Well, that's unfortunate that I heard that and learned that.
So the way it works, I'll just because I know we only have a few minutes left, but the way this works is that like in this example, we can do this invoice. It's going to be a $200 invoice to a customer. Okay. So I'm gonna draw the T out so you can see this, and I'm gonna label the debit sides and credit sides of the T. So I have a two, when I record that invoice, it's going to put a $200 debit to accounts receivable, and it's going to record that as sales on the credit side. Okay. Now that sits there in accounts receivable until the customer pays me. Okay.
Okay,
So,
and I
um,
understand that, but how can you
okay, well,
reconcile
well,
the
hold
account
on.
if
Let
you
me
have
let me
a
go let me go through the
sorry,
rest. Okay. So,
sorry.
all right. So I now have, let's say the customer only pays me $100. Okay. So, they owe me 200, but they only pay me 100, right? So I'm going to post a $100 deposit into my bank account, and I'm going to post a $100 credit to my accounts receivable. Um, Now leaving only a balance of 100 that's still due. So, when I get my bank statement, it is going to show me all of the income and all of the money, the expenses that I have spent. And I'm going to compare that information against QuickBooks. I'm going to find that $100 deposit um, that went into the bank is going to be on the bank statement, and it's going to show in QuickBooks. All I have to do is check that off in both places and make sure that it's there. The fact that this accounts receivable exists has no bearing on this at all. It sits there. Next, when they pay the next $100, um, and pay the balance, it's going to be a separate $100 transaction. That too is going to show up on the bank statement next month. Okay. So that reconciliation process does not look at accounts receivable at all. It completely ignores it, has nothing to do with anything. I'm only comparing what the bank says went in and out as to what QuickBooks.
Okay, well then I have another question then because I have dealt with this already with our business. Sometimes the cutoff time for the statement cuts off before you actually get that payment for that month,
Yeah,
which means that your
that's
reconciliation is not finalized and it actually shows on the next month's statement and you have to wait for it to show on the next month's statement so that you can adjust it correctly. So therefore you would have to be offset by the AR
uh,
and
well, that's it. Tell you what, I'm gonna finish up the showing the invoice, and then I will come back to that question. Okay? Because I this may take a bit more discussion. And I don't want to hold everybody up. I want to make sure everybody can see the invoice. And I'm glad for your question. I appreciate it. And I'm happy to hang out for a bit. Anybody who wants to stay
thank you.
that can stay. Absolutely. Not a problem. But let me show you the invoice that we've got going for Bob Mason before we close out tonight. So I do have this brand new invoice I'm going to create. So I'm in QuickBooks just to remind you how I got here. Um, I went and used the new button in the upper left-hand corner. I click new under the left menu, and I chose invoice under customers. And I'm going to type in Bob Mason. Again, this customer does not currently exist in QuickBooks right now. So I'm going to just type it in. It just takes a second to refresh the screen. Bob Mason. You can see add new customer comes up as an option. So I'm going to click add, and then we'll save it. All right, so Bob Mason's in there. And now let's say it's design services again that I billing out. Design services. And it's $200. And I will click save. So we'll take a look at the customer center and see what it looks like. So and compare how it differs from the sales receipt that we created earlier, right? So I go using the I'm in the customer of the sales center, but if I've lost my way, I can hover over sales on the left-hand side and I can select customers. But I want to go look at the customer list just to see what it looks like. So I'm going to find Bob Mason. That's going to be brand new. You will see a brand new customer now in the list. Bob Mason didn't exist before. And you will also see that $200 balance that's due. Okay. So, which is correct. Different from what a sales receipt showed, right? I actually have a balance that's due. And to see what QuickBooks did in closing this discussion out, I'm going to use the left-hand menu under Transactions, slide down to Chart of Accounts. And I'm going to look at Accounts Receivable. And it shows me the $200 invoice, Bob Mason, now as part of Accounts Receivable. So the balance was increased by $200. So it's now 55, 56, 52. Like that's the grand total of how much all of my customers owe me at this very moment in time. 200 of which is Bob Mason. Okay, so it records that balance. Um, and that's how the invoice works. I will stop here because I know we're out of time. But I am happy to hang out and answer any questions anybody has. And I am going to come back to the question about um, the um, bank reconciliation too, to make sure that that is covered. So, but before I get into that, any questions about anything we've covered so far and generally like how to record income?
Yeah, so Michael, I had an invoice and it was paid by the customer. So what happens in that case, in the area where you were showing, probably it shows up thing called paid. If the invoice is paid by the customer through the bank,
Yeah.
does it automatically come as paid?
No. So, recording a payment is a separate step in the process. Okay. So now that I've recorded that invoice, when the customer pays the invoice, I would go under new, under customers, click receive payment, and then I will select like Bob Mason in this case, and it will show me the invoices that are open for Bob Mason. You can see I have this $200 invoice down here. And I now can record the method of payment. Let's say Bob Mason mailed me a check and I received the check in the mail. Say, okay, here's my check. Now I know your question is a little different in that because you're doing electronic banking. But
Yes.
but anyway, I received the check in the mail, check number 1234. I check off the fact that I've got this money and I click save. What this will do is it will remove that $200 from accounts receivable, and it will put that $200 in my undeposited funds holding tank. So if I go now to the customer center, and this is relevant to your question still.
I do have a question when he's done as well, please.
Okay,
Not
sure.
not not the same one.
All right, that's okay. So when I go into the customer center and I see Bob Mason, you can see the balance is now zero.
Yeah.
Okay. And but behind the scenes, what has happened inside of QuickBooks, if I go to my chart of accounts, all right, and I'll go to accounts receivable. What QuickBooks has done is there's the $200 invoice.
Yeah.
It shows the, and then the $200 payment. So I see it coming in and right back out again. Okay. So it recorded that payment to reduce the balance in accounts receivable. It also put that $200 in my holding tank called undeposited funds. And if I go down to undeposited funds, the balance actually got $200 larger. Now it's $24,1252, and there's the $200 sitting there waiting to go to the bank. Okay. So that's what QuickBooks does when I record the payments. When you go into bank transactions, there are differences in how QuickBooks, a lot of people use electronic banking, and some people don't. There are pluses and minuses with electronic banking. I would, in many cases, if it were me and it was a small business and I didn't have lots of transactions, I think entering it all manually and not connect QuickBooks to your bank account is the way to go, personally.
Okay.
That's my personal preference. But most people will say you're crazy. Connect it because they want you to connect it. And especially if you have a really large business, like a large number of transactions, maybe bank accounts, electronic banking um is kind of like your saving grace, like you almost have to use because there's just so many transactions, you can't possibly type them all in, so you need to use electronic banking. But you go into the banking center, right? If let's pretend that Bob Mason instead um, paid me electronically somehow, and it shows up as a bank deposit. So it's going to show up here right now. You can see under transactions, there's 7 transactions to review. These are like brand new transactions that have come in electronically. I connected QuickBooks to my bank account, and it sits in here in this queue. So as it comes in, here's like $89.99 as uncategorized income, right? And let's say that was for some sort of a customer. So if I click this add button, it's gonna open up this sorry, I gotta check it. Oh, this is kind of set up as a liability account. Oh, that's like a refund. I see. Sorry. Yeah, unfortunately, it's too bad. There's no deposits in here. But so if I received, let's say that 89.99 was for a customer, right? And I select it, click add, it will give me the option to then connect that payment to the customer balance that's owed. It allows me to select the customer that it's for, so I can connect it. And then when I add that transaction and actually post it, that payment will reduce the balance owed by the customer. And so it will add it as a deposit in my QuickBooks checking account, and it will reduce it from accounts receivable. And it won't even touch the undeposited funds account because that's not even being utilized in this case. But that's generally how it would work. And I think that probably answers the question you had.
Yes, thank you. I will wait till the other person takes you take the question from other persons.
Oh, sure. Go ahead.
Okay, so the question that I have is a part of depositing amounts, right?
Yep.
When you work with certain companies, they have different amounts. You get it all in one lump sum. So say I have $200, but $50 of that is in tips. And then the other portion is extra from like Seattle income, because Seattle, where I live, Seattle pays out more than Puyallup. So you have 3 different incomes that equal out to 200, right?
Yep. Yes.
How would you say the best way to incorporate that into QuickBooks would be, aside from like the grueling task of looking at exactly each amount and trying to label them correctly or categorize them correctly?
Well, this is the challenge of using electronic banking. Okay. So there are all kinds of examples where can get confusing because um, if money comes in a lump sum like that, you need to separate it out into the to distribute it to the correct. So if you're receiving the money, uh, there's a
Right.
lot of.
I'm sorry.
Do you have
One
invoices
more
already
thing.
created?
I'm going to say one more thing because the tips can't go to the company. They have to go to your own personal taxes because it's a tip to you, not the company.
Mhm.
So like it gets a little bit messy when you get to that point, you know.
Yeah. When tips come to you personally, that needs to be recorded into your owner's like that is going to be um there's going to be an income account specifically that, and make sure that that gets captured into that account. So if you get $100 and 50 of it is for tips and 50 is it for income, is the 50 that's not for tips, do you have an invoice that's on the system and that you
So
need
there's
to log
always
against?
going to be an invoice, but the invoice is going to be the collective of all three things. And so what I have been doing, and I want to be corrected if I'm wrong, is I categorize tips as tips, and it goes in the tips are categorized to Trey or Joseph Hudson, right? Because that is his personal income that he will have to claim on taxes, not towards the business. That it will not go towards business taxes. And then the other one is it's called gig pay. And that is the actual amount that they're paying you for your gig. And
Okay.
then last one is in Seattle, it doesn't matter because we're trucking industry. It if you don't make enough per hour, then they will pay you out extra to make up for what you should be making per hour for the
Okay.
Seattle pay. And
The invoice includes all of these things, including the tips.
yes,
Okay. So it matches. The amount received will match the invoice total.
correct, it will.
Okay. Well, just okay. Well, whenever the money comes in, apply it against the invoice so it zeroes it out. That's perfect. That's easy. Um, I sometimes customers will receive money, excuse me, a company will receive money that you weren't expecting. Like you did an invoice for it. And so I wasn't sure whether that was your situation,
Well,
but
no, I don't do invoices for them. I just have to categorize them correctly. Like
right.
if there's a $200 payment, in that payment screen, it's going to say $200 from Home Depot, let's say. But I have to go in there and actually specifically put down in categorizations inside of the payment saying what the payment came from, what the
Yeah.
three different reasons are that you're getting paid for it.
Yes. Yep. That
Sometimes I even have to go in and do a negative because they take taxes out of it with other companies. And so you will see that you got paid $900, but you only actually made $800. So you have to say, okay, well, the reason that I got paid 900, I only made 800. I have to put a negative number in there,
yep.
negative 100, in order
Well,
for it to make sense.
yeah. Make sure you record that 100 as an expense though. So, because that is a legitimate expense.
So it's the taxes
Yeah.
that they take. No, I'm sorry, let me use the correct wording. It's not the taxes that they take out, it is the commission on their end that they take out. So they're
Oh,
taking $100 because they're giving us the jobs.
yeah. And that
And
commission
then we have to
is a
then
commission is a legitimate expense though. So make sure to record that as such.
okay.
Because just like fees for like Square, right? If you take $100 payment and they only give you 90, that $10 is an expense you can write off. It's you need to capture that as an expense and add it to the transaction so that it still equals 100. All right. You have to make sure that if especially if there's an invoice that the $100 invoice gets paid, but that $10 has to be captured someplace. So it's important to record it.
Right.
Yeah. But anyway, that's good. That good. Yeah, that all sounds good. All right. Did you I know there were a couple of the questions that you had about the bank reconciliation. Um, so I'm not sure if I was clear when I explained it. But that um yeah, the fact that you have receivables open, that means customers owe you money. Yeah, that is it's incorrect to say that you can't balance your checkbook until they pay. That's not accurate.
Right. Because they're going to sit there and be like, why do you have this money that's supposed to be paid to you and it hasn't been paid to you? What is the reason for that? And why aren't you
Yeah.
collecting your
And it will stay open until such time as it gets paid. Maybe it will never get paid and then it becomes bad debt. But it will that's a different issue. But um so if that makes sense, are there any remaining questions on how that works or
No, I think you gave me a lot of information that I need to hear, and I appreciate that.
okay. All right. No problem. So we also there was also a question from Ali, is it?
Yeah.
Okay.
No, I think on the reconciliation, it's a big mess for me. For example, have a bank account. From the last 6 months, there are like about six transactions in the bank account. In the QuickBooks, only two are showing up.
Well, it's a matter of like troubleshooting to find out. So if they've entered into QuickBooks, first question is, did they actually occur?
No, in the let's say in the QuickBooks, only two are showing up. In the bank, it's actually six
Okay,
altogether.
so you need to enter the
Yes.
transactions into QuickBooks to
Yeah,
make.
and the reason I don't want to enter is because it's the accounts are linked, and I want things to happen automatically. What happens in the bank should happen automatically in the QuickBooks because there are two such same sync system is what I'm thinking.
But
Yeah.
that's why you're supposed to reconcile so that you can make sure it's happening. We can't always depend on electronics to do the deal for us.
Yeah, there are errors sometimes that happens. So those four transactions that the bank has, do you agree that they're legitimate
Yes, they are
transactions?
correct. Yes, they are correct. Yeah,
Okay. All right. Um, it- and they're not sitting in your queue waiting to match up, right?
they are not. They are not.
All right. So you can manually add those to QuickBooks without having any ill effect.
What I'm afraid about adding manually is it's going to make up more of a mess. It will become a bigger mess.
It shouldn't.
Okay, I'll try.
Just when you enter information into QuickBooks, it does not tell the bank to make those payments.
Okay,
I
all
mean
right.
that, yeah, you can't um you can't use QuickBooks to move money around at your bank.
Sure.
Okay, it's a one way transaction. It just basically takes all of the deposits and the payments from the bank. It's one-way information feeds into QuickBooks, but it does not go the other direction.
Well, sounds good. I will probably definitely attend your other class to really catch up. This has been very helpful. Thank you again. Thank you.
You're welcome. Yeah, so I would just to finish off that question, like those four missing transactions, enter them and then do the bank reconciliation um at that point.
Okay,
Why they didn't show up. No, it is a question. I mean, you can contact Intuit tech support. I don't know. In my the kind of the feedback that I've received is that they are not often helpful. And I hate to
okay.
say that, but they are not often helpful. And they may direct you to to do things that can at times make more of a mess, as you say. So
Yes.
I would probably not. I would try it on my own.
Okay.
I would not
Thank you
con.
again. Thank you. Appreciate it. Thank you.
I'll
And I
say something really quick.
go ahead.
For the first, I would say 6 to 9 months, I did try it on my own, and it was grueling. Okay, yeah, it does make it a little bit more like, is it going through correctly when you do it online? But it does make it a lot easier for it to automatically do it. And you just have to make sure that you put it in there correctly for it to automatically do it. Because when you do it by yourself, you're adding on at least like 2 to 3 hours of your time aside from working on your business just to put it in if you're getting a lot of clients. So, yeah.
You're talking about manual entry versus I think the best possible scenario is probably a mix. Because um and it all depends on the type of business and the number of transactions. If you have 2 transactions a week in your business, um, it's not any time at all. If you're talking hundreds of transactions,
I mean,
or more,
only
then
having two transactions in a week, I hope that you're making big bucks on those two transactions, especially with the
there's all kinds of different size businesses that use QuickBooks. There's nonprofits, there's all kinds of people that use it. Um, and it doesn't again, there's two schools of thought on it. I have students who don't use electronic banking at all, and I have some that would never do it otherwise.
You're a
But
cursive writer, aren't you?
what's that?
You like writing in cursive, don't you?
Oh no.
Okay.
But in the end, I've seen the electronic banking cause a real headache for people. They had to start over to the point where they had to just start over with a new subscription, and I've had some that have never had an issue. So it really all is dependent.
It is dependent on how well they know how to use banking. I've been in banking. I was a personal banker and an accountant and everything. So it really depends on how well they are taking care of their banking on the outside. You have, even though it does take extra time, you have to watch over it. You have to. There is no outs against that. There is no quick way past it. You have to look over it. You have to maintain it every day. Not when you get your statements, but every day you need to make sure things are going correct. But because it can transfer over immediately almost most of the time, it shouldn't take as long as it would to enter in the other things manually.
Yeah, very good points. So, I appreciate everybody's time tonight. We are out of time. We went a little over just answering questions, but I'm always happy to do that. So before we close out, just as a reminder, we do have the additional workshop that is coming up at the end of the month, October 28th, that we talk about recording expenses within QuickBooks. So if you'd like to join us, sign up using the SCORE website, score.org, and we hope to see you there. So, that being said, thank you so much for joining us tonight, and I hope you all have a wonderful evening. And it was nice meeting all of you.
Thank you very much for your time and teaching us extra stuff that we need to learn. And I definitely will be at that next workshop.
Great, great. Thank you very much. I appreciate it. All right, take care, everybody.
You too.
Thank
Bye.
you.